In today's trade of the day, we're going to go through and take a look at my three strikes you're out strategy, which means that I lost 3 times in a row. This is a bad video. This is one where I tried to trade 3 different times and lost all 3 times. And so the lesson here is that if you strike out 3 times in a row, you need to stop trading and not continue going down that rabbit hole. Now, today was a very awful day. All right, it was narrow sideways channel day, and I was looking for a breakout, trying to anticipate a fall in the price right here off of this break below the narrow sideways channel, which, as you can see, I went short right here. The market immediately started to go back against me. I'm in with 2 contracts. I have my stop set in there, 1 price bar back. I'm actually trailing on the ATR, those yellow dots, in anticipation of a drop in price, only to have that market come back and knock me out for a $150 loss. Here's my next attempt as we come through. My next attempt to do the same thing. I'm going to come through, and this market actually started to drop a few minutes later, and so I decided that what I was going to do is take a short position, once again, trying to continue this downtrend, anticipating the next leg. So I was looking for the A, B, C, D pattern. I take the short position. I have a very small risk. You can see I put my stop there right above previous high, which is right there by those yellow dots. So I'm not taking a big risk, and if the market doesn't immediately move in my favor, it's a breakout or bailout strategy. So I'm looking for the market to fall. I'm in with 2 contracts, and I'm right this time. The market actually does start to fall. And there it goes. You can see us dropping down. It's moving a little bit in my favor, and it continues to fall. We're almost up recovering our losses at this point. Just broke over $100, and there it goes. It continues to fall, and I'm looking for it to break below that next price bar, that red price bar. I want to see it go down and break all-time new lows and continue to fall and make another big, long A, B, C, D down pattern. Now, I switched my bars up a little bit just to change some of the indicators that I'm looking at, and there the market starts to fall. I'm looking for it to break below that low point right there. The market's being real slow and lazy. It doesn't want to break out and run for me. I get a little nervous thinking this market's looking like it's going to die on me and come back, so I move my stop to break even. I'm in with 2 and I have a stop for 2, and I've got my stop moved down to break even just in case this thing pops back. I don't want to take another loser. It's a breakout or bailout strategy. Remember, if this market doesn't immediately go, I'm just going to get out. There it starts to fall a little bit. I'm looking for it to break below those price bars. If it does, I'll add on a 3rd contract in anticipation of a continuation of the downtrend. There we go. We add on that 3rd contract. That moves my dollar cost average down a little bit, so I have to adjust my stop to bring it back to break even. Notice I'm short with 3 contracts. I have 2 stops. I have my mouse hovering over the exit button, and there that market starts to drop, and we're up making some nice money at this point. And we've got our money back. If we just exited out, we'd be back to break even. I'm looking for this market to continue to fall. I'm now in with 4 contracts. I have my stop set at 2, so we're looking to recover our losses from the previous trade, and the market stalls out on me, and it doesn't continue to fall. It broke that low, and then it failed. I didn't do anything wrong. The market just didn't follow through for me, and so I got stopped out with 2. And now I'm looking at this market, wondering if it's going to continue to rally. I've got a green bar. I'm hovering my mouse over the exit button. I've got 2 more contracts still sitting in there in anticipation of a downtrend. And no, it fails on me. And I take another loser on this one. I had 2, which were basically a break even, and then 2 very small losses. So at this point, that's 2 strikes. I've had my first strike and my second strike. And now this market starts to look like it wants to rebound. We've got the yellow arrow crossing the average true range, which is those yellow dots. And so I go in there and I drop my stop in. And as you can see, I'm just anticipating the market turning and rebounding and rallying up. And I'm looking for it to continue to rally higher. Now, this is a very sad day. All right. The low volume, the market's not got very many participants. This is a big sign that I should not have been trading in the first place. Non-trending markets, not something we want to force positions on. The market has a tendency to just kind of dawdle back and forth and doesn't give us that trend we're looking for. And we get stopped out for a 3rd time. That's 3 strikes. You're out. You're out, land. No more trading for the day. We may come back later because the Fed is going to speak a little later, but now is not the time.